Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top author on TradingView for many years, as well as being one of the only traders with a fully verified MyFX book track record. So if you want to elevate your trading, you're definitely in the right place. So subscribe to the channel, and without further ado, let's jump right into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I'll speak about gold. First, I'll give you the technical aspect, then we will be moving to the commitment of traders analysis to see what institutions in the market are doing and how they are moving and shifting their orders. And then I'll put together these two different types of analysis. So this is definitely a video you do not want to miss. Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment is in a very strong uptrend. The market has been creating a series of monthly higher highs and higher lows. So clearly we have an uptrend here from a monthly standpoint, and all this uptrend is fueled by strong institutional buying, which is something that we will speak about in just a few moments when we move to the commitment of traders analysis. For now, let's keep in mind that the market is in a strong uptrend, and we can also notice, if we zoom in into the most recent price action, that the last candle that the market created here from a monthly standpoint is this candle here. So a candle which essentially has a green body, but at the same time it has a very long wick. Now, usually when there is a candle like this, what would you expect the market to do next? Well, when there is a candle like this, so again, with a very long wick and a green body, what you expect after that is the next candle to try to fill in that wick. Now, the reason is very simple, and it ties down to basic market structure. Because if on the monthly time frame you're seeing a candle like this, it means that on lower time frames, for example, the weekly time frame in this case, you will see an impulse and a correction, in which the correction is exactly the wick that you see on the monthly time frame, which is a basic concept when it comes to multi-time frame analysis. Obviously, as you go down on the time frames, you will see more granularity with what kind of data points you see and how much movement of the chart you see. So in a situation like this, you have the impulse, the correction. The correction is the wick that you see here in the monthly. The next candle is supposed to fill in the wick, because the natural movement of the market is to create impulses, corrections, and new impulses to the upside. That is the basic movement of the market, is what creates in an uptrend higher highs and higher lows. So the definition of an uptrend itself. So here in the monthly, everything is quite clear. Let's drop down on the weekly time frame and see what we have. From a weekly standpoint, the situation is quite clear as well. We notice a massive impulse and then this correction. Now, if we want to measure this correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg. This shows us how we just had a perfect correction to the area in between the 0.32 and 50% retracement levels. Now, that is exactly what you expect in a strong uptrend. In a strong uptrend, you expect an impulse and a correction to the 0.32, and then the next continuation to the upside, which is what the market seems to be doing here. We had the impulse, the correction. Now the market seems to be ready for more bullish continuation. What we can also notice is that also here on the weekly, we just had this candle here. So a candle with a very long wick and a green body, which means that also on the daily time frame, we should see an impulse and correction. Just a quick interruption. Let me know in the comments below any new pairs or topics that you would like me to cover in my next videos, because I'm always open to suggestions. Dropping down on the daily time frame, that is in fact exactly what we have. And by the way, I spoke about gold just a few days ago when the market was around this area, and I explained all the reasons for which I was expecting this rejection to the upside. And then again, when the market was here, I made a full breakdown explaining all the reasons for which I was expecting the market to create this correction, to go and test this area in between the previous support, which is still acting support, and the previous resistance, which is now turned support. And by the way, now that the market has created exactly these moves, I will also link those previous analysis in description, so you can go and check them out for more free education. But let's continue here with analysis. Now, before we dig deeper into what kind of structure and price action we have here on the daily time frame, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing. Now, if we're looking at the data for gold, we have to keep in mind that we are already looking at gold against the USD, because all currencies and commodities on the spot are traded against the USD. And we can see that with the last reports, net positions were massively increased. We went from 212K all the way up to 266K net positions. Now, obviously, this data is before the US government shutdown, because during the US government shutdown, we didn't see what institutions were doing. We're still waiting to get the new data. So obviously in this case, because of the government shutdown, there is a delay in the release of new data. But usually institutions take a lot of time to move their positioning. And in the long run, it's clear that they have been moving aggressively to the bullish side, going from 161K net positions, so with 238K longs compared to only 76K shorts, all the way up to now 266K net positions. So even more longs were added compared to shorts, with now the current positioning being 332K longs compared to only 66K shorts. Now, obviously, this is very bullish for gold, and the price action has been clearly bullish in the long run. Now, what we can notice here, going back to the analysis here on the daily time frame, is that the market is testing support. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now, back to the analysis. So as I was saying, in a situation like this, we are testing an area that was acting as previous support preceding this rejection to the upside, which the market then broke to the downside. And what we know is that in the market, previous support, once it is broken to the downside, becomes resistance. So the market here respected this area as resistance, but after that, the market broke back above the zone with this impulse. So at that point, this previous resistance became again support here. So what the market is currently testing is previous daily resistance now turned support, with a good probability of a potential rejection to the upside away from this area. What we can also notice is that as we have an impulse and correction, if we want to measure this correction, again, we have to take our Fibonacci from the low to the high of the impulse leg, which shows us how inside of this area, all this zone here is an actual quite important area, with the 0.32 50% and 0.618 Fibonacci retracements lining up at this area, which is also the previous horizontal resistance now turned support, which means that actually inside of this area, what we have is confluence of support. And when there is confluence of support, there is an increased probability of seeing institutional buying. So that further increases the probabilities of a potential rejection to the upside. So in a situation like this, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, everything that you see me share here on YouTube is just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you head over to my website, which you find linked in description. Here, you have the possibility to gain access to the best mentorship program in the world. You can get all my courses ranging from the very basics of charting all the way to the more advanced topics. You also have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which is the software that you often see me use in my analysis. And you also have the possibility to gain access to the entertaining live trading show. So essentially a live stream of all my trades as they're happening live every day. So my entries, exits, how I manage the positions, all streamed live every single day essentially in this Telegram channel, which is obviously private just for members. You also have the possibility to gain access to all my EAs. So essentially all my strategies, which you can then customize to your own preference. And here you see breakdowns of each and every one of my strategies, including a 10-year historical backtest of the strategy, on high quality tick data. So essentially backtested on live charts. So basically, I would suggest that you go and check these ones out. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to at least go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education. And I will see you in my next video.